Auto insurance. By the end of this lesson, you should be able to discuss comparative negligence laws that impact the necessity for automobile insurance, and describe and explain the parts of the personal automobile policy. Because contributory negligence laws made it increasingly difficult for many innocent accident victims to collect for damages, most states have enacted a variety of comparative negligence laws, including compulsory insurance, financial responsibility laws, unsatisfied judgment fund, uninsured motorist coverage, underinsured motorist coverage, and no-fault auto insurance. With respect to compulsory insurance laws, most states in the United States have enacted these laws which require the owners of cars to carry liability coverage so that a vehicle can be registered. These laws require proof of future responsibility, financial responsibility, by the carrying of insurance or posting of a cash deposit, bond, or other security under the following circumstances: following an auto accident involving injury or property damage exceeding a specific limit, after conviction of a serious offense, drunk driving for example, after loss of a driver's license, or after failure to pay a legal judgment arising from an auto accident. Unsatisfied judgment funds. These funds have been established by a few states to compensate persons who are unable to collect a legal judgment that results from an automobile accident. Uninsured motorist coverage. Under this coverage, the insured is able to collect the amount that they would have collected from the insurer of an insured driver if that driver had been carrying insurance. So the insured's own company indemnifies the client and then pursues collection against the uninsured driver. Now, underinsured is a little different from uninsured. Uninsured is no insurance. Underinsured is when there's some insurance, but the limits are lower than what the client has. So it provides protection against accident victims when a negligent driver has insufficient insurance limits to pay for the damages. So in this example, assume that a negligent driver causes injury of $25,000, but the person only carries $20,000 of insurance for the minimum requirement of that specific state. If the injured party has underinsured motorist coverage, they can collect $5,000 from their own company. So it doesn't stack on top 20 plus 25. It would just be, or even higher limits, whatever the client has, it would just be the full amount of the judgment. First collecting the portion from the underinsured driver and then the balance from their own policy. No-fault auto insurance. No-fault auto insurance came into being in the early 70s as states attempted to address certain shortcomings that exist in the traditional tort system. There are a few forms of no-fault coverage. We have pure no-fault, modified no-fault, an add-on plan, and choice no-fault. First, pure no-fault. Each auto owner is required to carry the first-part insurance that compensated all persons injured in automobile accidents involving that vehicle. The right to sue a negligent party, even for pain and suffering, would not exist. Now, modified no-fault differs, and it's also the most common type of no-fault that's in existence. It is the most common type, which can limit the rights of an insured party to recover damages from a negligent party. Those rights are set by either a verbal or dollar threshold. Here's what that means. A verbal threshold is, for example, serious and debilitating injuries. Something that a lay person like ourselves could look at and say, yes, that person's really injured. If you see a compound fracture, something serious like that, no question about it. Dollar threshold. State of Michigan, for example, has a dollar threshold. And after just a few $100s of bills, well, you can still collect benefits under your no-fault policy, but now it's crossed the minimum threshold possible to go out and sue the person back in the regular tort system. An add-on plan is there's no restriction on the right to sue a negligent party, but first-party no-fault type benefits are available by choice. The last being choice no-fault, and under these plans, the insured party has a choice: coverage under the traditional tort system or coverage under a modified no-fault at a reduced premium. So if you give up a right to sue, then you'll pay less for your auto insurance, and your own policy will take care of you. You just can't go after a negligent third party. Let's move on to the personal auto policy. They were first introduced in 1977 And like the homeowner's policy, the personal auto policy is a package policy that provides several different kinds of coverage. Parts are listed here. Part A is liability, Part B, medical payments, Part C, uninsured motorist coverage, Part D, comprehensive or coverage, comprehensive and collision, coverage for damage to your auto, Part E, duties after an accident or loss, and Part F, general provisions. So again, reviewing the parts here. A is liability. That pays to the other party if you're found to be liable in an accident. It provides a defense for yourself if you are sued, or just even without litigation, if someone's making a claim against you. So it defends you and indemnifies the third party. Part B, medical payments. That pays if you're injured regardless of fault. So whether it's your fault or the other person's fault, there's first dollar coverage available to help with your deductibles, co-pays, things like that in your health insurance, and it comes from your auto insurance policy. Part C is uninsured motorist. That pays if you are hurt by an uninsured driver. So it doesn't help the uninsured guy, it helps you if the other party is uninsured. Part D is physical damage. And again, there's two subparts to that, comprehensive and collision. Collision, think you're rolling. You roll into somebody rolls into you. You collide via motion. Next is other than collision, also known as comprehensive. The vehicle stolen, catches on fire, vandalized, you hit a deer. Now I know that you're rolling. I just said that you have to be rolling to have a collision. Well, collision with an animal typically is comprehensive because you can't really control that if the deer runs out in front of you, or a dog, or whatever animal. And the personal auto policy is different from the homeowner's contract in that the policy owner can pick and choose the coverage they want. If they don't want to have coverage for comp and collision, that's fine. They don't have to pay for it. Whereas in the homeowner's policy, personal property is set a certain percentage of the coverage A, the dwelling coverage, and that's non-negotiable. You can't strip it off to save money. But on the auto policy, we can pick and choose. Next bullet point. Coverage applies only if the declaration page indicate coverage has been purchased, and each insuring agreement can generally stand by itself, and some definitions change depending on the insurance agreement. Now, as far as eligible vehicles, they include any vehicle owned or leased by an insured, husband or wife, residing in the same household, vehicles with other forms of ownership, any private passenger car, van, sport utility, or pickup under 10,000 pounds gross vehicle weight, that's what GVW means, and motorhomes and motorcycles. So again, liability. What's covered? It's for when you make a mistake. You damage property and you hurt someone. And you'll see what we call split limits in most cases. So here on this screen, you'll see 25,000, 50,000, 10,000. The first number, 25,000, is the limit per person for injury. So that's the most. If someone has $100,000 of injuries, your policy in this case would only pay $25,000. The next is the aggregate for more than one person. So if only one person is hit and you have 25, 50, and 10, they can only collect $25,000 for their injuries. But if there were 3 people in that car, then the $50,000 limit comes into play. And just remember, no one party can get more than $25,000. The last number is property damage of the split limit. In this case, $10,000. So that doesn't help for injuries. That is for property that's damaged. You hit a car, you hit a tree, you run into a house, you run over a dog. Dogs are personal property. So that's not an injury claim when you hit an animal like that, someone's pet. That would be a property damage claim. So again, an example. This client has liability coverage 25, 50, and 10. And he injures 2 people in an auto accident. One's awarded $30,000, the other one's awarded $25,000, and the car worth $12,000 is completely destroyed. So John's insurer is going to pay $25,000 of the $30,000 award, because that $25,000 per person limit, the full amount of $25,000 for the second award, and $10,000, which is the policy limit for property damage for the car. So let's talk about some exclusions. Intentional injury or damage, using a vehicle without permission, vehicles owned in a business, and non-owned vehicles. Now, coverage for permissive use and non-owned vehicles varies by carrier. Some of the bargain carriers would have stripped down policies, no permissive use, whereas some of the more expensive carriers and have a benefit-rich policy, they will cover you if you loan your car to a neighbor or your brother who flies in from out of town. Permissive use is covered. So we won't give a list of companies. It's one that look at the contract and you'll see if permissive use is or is not covered. So moving on, medical payments coverage. What's covered on medical payments coverage? If you're hurt in an accident or hit as a pedestrian by a motor vehicle. So it covers reasonable and necessary medical expenses because of a motor vehicle accident. And the typical policy limits are $1,000 to $100,000 per person. As stated before, this works regardless of liability, whether it's your fault or the other guy's fault. And most people will carry medical payments coverage that will it'll dovetail with the deductibles in their healthcare plan. I have some clients that will not carry medical payments coverage because they have an HMO that has low or no copays. I have other clients who have high deductible health plans and they want the coverage to coincide with the family deductible on their health insurance. And again, I have other clients who want to go even higher on their limits because they're afraid if they're carrying their friends and their friends don't have health insurance that they want something for them. So again, a few different scenarios you're going to come across. Exclusions, same as for Part A with some minor exceptions, but generally it'll align with the liability Part A coverage. Okay, uninsured motorist coverage. Again, this is for when you are hurt by the uninsured person and you and people in your car. And it's compensatory damages that insured's legally entitled to recover from the owner or operator of an uninsured vehicle because of bodily injury sustained in an accident. Uninsured motorist coverage includes someone who has no insurance, one with liability limits below the state mandate, one driven by a hit-and-run driver, and one whose insurer denies coverage, which goes back to the first bullet point, meaning you have no insurance. Typical exclusions. If the vehicle is owned by a family member, so let's say my wife and I have 2 cars, and an adult child moves back home with us, and he has no insurance coverage, and he hits us and hurts us. Well, he's a member of the family, and he's living in our residence, so what we call a first family member. Uninsured motorist would not apply because as one of the family members, he should have got his own coverage. Next exclusion, settling without the insurer's consent. So, example, if I go out and I settle with the other party who caused the accident and didn't tell my insurer, well then I can't make an uninsured motorist claim. So they have to be involved in the settlement negotiations. Next point, using the vehicle in public conveyance. So, you can't be a taxi, for example, or a ride for hire. Airport shuttle, things like that. You'd have commercial coverage, different commercial auto. And punitive damages against the other party do not apply. Physical damage coverage for your car. So coverage for physical damage to your car and certain non-owned vehicles. We already mentioned there's 2 subtypes to this, collision and other than collision, also known as comprehensive. Collision is defined as the upset of the covered auto or impact with another vehicle or object. Other than collision includes fire, theft, explosion, earthquake, windstorm, hail, water flood. So the creek rises and the car is submerged. That's going to be covered under comprehensive or other than collision. Vandalism, glass breakage, contact with birds or other animals. Again, hit a deer, hit a dog, those sort of things. And some typical exclusions under that coverage. Using the vehicle in public conveyance, damage for wear and tear. You have to maintain your car. Okay, just because you drive 60,000 miles and the tires wear out and you have a blowout as a result, that's not covered by insurance. It's a maintenance issue. You got to take care of the car. There may be exclusions on electronic equipment. There will be exclusions on tapes, records, CDs, other music media. Exclusions for trailers, camper bodies, motorhomes, those need to be endorsed up. And custom furnishings and equipment. So you get a $1,200 top-of-the-line bike rack and you don't tell your insurance company, well, depending on the company, that may not be covered. So again, check your policy or ask your agent or broker. As far as coverage for damage to your auto, Losses are typically settled on an actual cash value basis or stated value. Most commonly ACV, actual cash value. So you have a 2008 Honda. It's now 2013. And that car is totaled in an accident. You don't get a 2013 Honda. You get the cash equivalent for getting something like you had, another 2008 Honda. It's not replacement cost like on the home policy where the 40-year-old home burns down and you get a brand new home built up. That's replacement cost. Cars are actual cash value, so depreciated for current condition. And the insurance company has the right to repair or replace the property with other property of like kind and quality. So, for example, stereo's stolen out of your 6-year-old truck and it's a Chevy truck. The insurance company can find a used radio to install inside of there. They don't have to pay for a brand new radio. If there are no if there are no used radios available in the marketplace from a junkyard or wherever, that they would most likely pay for the new piece of equipment in that example. Moving on to duties after an accident or loss. Okay, so you had the accident, now you want your insurance company to take care of you. Well, there's a few things you have to do. One is promptly report the accident to the insurance company. Whether you call in during business hours, whether you go online, or call a call center, you have to report it. And you must cooperate with the insurer's investigation. So if they ask you to produce a estimate for damages or to make a police report, you need to do that. And you must notify the insurer if a hit-and-run driver is involved. That protects your rights to make an uninsured motorist claim. And you also must take reasonable steps to mitigate your loss. So your car is out in the driveway and somebody vandalizes it and they break the windows and you see there's a rainstorm coming into town. Then it would be a reasonable expectation that you get a tarp or some plastic and cover up the windows and tape it. The insurance company will reimburse you for that extra expense. Some general provisions. This section contains a number of general provisions, including policy period and territory. So it'll talk about, from 12:01 a.m. on the effective date to 12 midnight on the cancellation date. So, and territory. For most companies, that's going to be the United States and Canada. And depending on the company, there may be coverage into Mexico for a very limited amount as far as geographically speaking, commonly 50 miles south of the border. But one little caveat. The Mexican government does not recognize American insurance. So if you're driving down to Tijuana for the weekend, you need to stop at the border and purchase the Mexican insurance so that you meet that country's requirements for auto insurance. Termination provisions define the rules as far as refunds of premium, how to notify regarding termination, whether it can be verbal, in writing, etc. Legal action against the insurer. It's called the Suit Against Us Clause. What that means is, in order for you to sue your insurance company, and you would be typically doing that for bad faith, saying they did not treat you the right way and they violated their contract, that certain conditions must be met before you are able to sue them. Fraud, of course, that's going to be excluded, and bankruptcy. Again, depending on the company, you may or may not see bankruptcy on there. Some common endorsements, the personal auto policy. There's extended non-owned coverage, covers certain non-owned vehicles that would otherwise be excluded. For example, your employer gives you a car because you're in sales and you drive around with that car. Then on the weekends, you're allowed to use it. Well, you have your personal car and that car is insured, but you'll do the endorsement for extended non-owned coverage because you may be using your employer's car for an extended period of time that would normally not be covered. We also have named non-owner coverage that provides coverage to drivers of non-owned autos. Other endorsements, miscellaneous type vehicle endorsements, motorhomes, dune buggies, motorcycles, etc. And auto loan or lease coverage. In the event of a total loss, the insurer pays off the leasing company or other lender in full. Another issue, hard to insure drivers. The proverbial lead feet who get frequent tickets, drunk drivers, reckless drivers, those sort of things. There are specialty insurers who specialize in that particular part of the market. The premiums are not cheap. It's very expensive coverage, and typically the policies are very restrictive. But there is a market for every driver out there. There's also state programs providing limited coverage through auto insurance plans, joint underwriting associations, that'd be Florida, and reinsurance facilities. Auto liability coverage is necessary for anyone who owns a car, and most states require you have it before you can register that vehicle. And the state-required minimum coverage often does not provide adequate protection. So when working with a client, if you see that they have a decent job with a good income and they have assets to protect and they're driving around with state minimums, I mean, literally, they're a car wreck away from bankruptcy. At least in California, you cannot discharge an injury settlement via bankruptcy. That will stay with you, especially if you have assets. So very common limits are $100,000 per person, $300,000 per accident, and $50,000 property damage. I don't like to use the word rule of thumb because there is no rule of thumb, but it's very common for a lot of homeowners to have those as a starter limit on their policies. And collision, fire, theft coverage also advisable for a vehicle that is of any sort of real value. If it's just a basic transportation vehicle, a beater truck, a commuter car, then that's when you see people strip off comp and collision to save money, because if the vehicle's damaged in an accident and totaled out, they didn't have that much to lose. Insuring watercraft. There are two types of boat policies. There's the boat owner's policy, typically less than 30 feet in length on the boat, and the yacht policy for larger luxury boats. Now, some smaller boats are covered under the homeowner's policy as personal property. This varies by carrier. Look to see what it says in the homeowner's policy. Commonly, sailboats under 26 feet in length and power boats under 40 horsepower. So you have a little pond in the backyard, for example, and you have a John boat with little 10 horsepower motor on there. Well, you don't have to have a registration for that. It's on your private pond. Typically, that will be covered under the homeowners. You don't need a separate boat policy for it. But now, if you are taking your boat on a public waterway, typically you have to have it registered with the state, and now we go back to if you're going to register a vehicle, the state wants to see insurance. So, other features on watercraft policies. There's protection and indemnity, so liability. Medical payments, very similar to the auto. Uninsured boaters coverage, again, very similar to the auto. Physical damage, also known as hull coverage, so covering the hull of the boat, the motor, other equipment for the boat. And there are other coverages available by endorsement. Client entertainment being one endorsement out there. You're a business person, you want to take people out on the boat, you're having some drinks in the weekend and they're hurt. Even though that's a business venture, you typically can endorse that up with many insurance companies. As far as insuring aircraft, coverages are similar to watercraft and personal auto policies, including hull coverage for the airplane itself and liability coverage, so if you crash and you damage people or property on the ground, as well as medical payments to passengers. So in summary, we've had a chance to go over auto insurance laws and parts of the personal automobile policy. Thank you for your time.